You got a great interest rate from your mortgage broker, 3.99%. But what if I told you that rate could be attached to a mortgage that could cost you tens of thousands of dollars to break? Today, I'm giving you the 3 questions you must ask your mortgage broker to protect yourself. Choosing a mortgage broker is one of the most important decisions you'll make. Most people just ask, what's the interest rate? That's the wrong question. The rate is important, but the mortgage terms, prepayment privileges, and penalty structure are what can really cost you. Let's get into the questions that matter. Question number 1, what is the penalty calculation if I need to break the mortgage early? This is the most important question. There are 2 main penalty calculations, 3 months of interest or the interest rate differential. The interest rate differential is the one that can really hurt you financially. Here's how it works. If you got a great rate 3 years ago, say 2.5%, and rates have gone up since then, the bank calculates the difference or the differential between your old rate and today's rate multiplied by your remaining mortgage balance and term. This can easily be $10,000, $20,000, $30,000 or more. The big banks, TD, RBC, Scotiabank, they almost always use the interest rate differential calculation for fixed rate mortgages. Variable rate mortgages, on the other hand, usually calculate the penalty the other way, 3 months worth of interest, which is much, much less. You need to ask your broker, if I have to break this mortgage in 3 years, what will my penalty be? Get them to show you the calculations. If they can't explain it clearly, it could be a red flag. Question 2, what are the prepayment privileges on this mortgage? Most mortgages come with some sort of prepayment options, usually something like 10, 15, or 20. This means you can make a lump sum payment of up to 10% or 20 or 30 of your original mortgage amount each year. But not all mortgages have the same flexibility. Some big bank mortgages are more restrictive. They may not allow you to make prepayments at all. Why does this matter? Because if you got, for example, a bonus from work, or you inherited some money, or you just wanted to pay down your mortgage faster, you want the freedom to do that without penalties. Ask your mortgage broker, what are the prepayment privileges? Can I increase my payments? Can I make lump sum payments? Are there any restrictions? This is especially important if you're planning to sell and move up in a few years. You'd like to have that flexibility. Question number 3, what is your rate hold policy? And do you offer a rate drop guarantee? Interest rates can be volatile. When you get pre-approved, your broker should be able to hold that rate for a certain period of time, sometimes up to 90 or 120 days. This means that if rates go up before you close, you're protected. But here's the key question. If rates go down before I close, will I automatically get the lower rate? This is called a rate drop guarantee. Not all brokers or lenders offer this. Some will hold your rate against increases, but won't give you the benefit of decreases unless you ask. You want a broker who will lock in your rate to protect you from increases, but also give you the lower rate if the market moves in your favor. Get this in writing. It's a big deal when the rates are always shifting. Here's a free bonus question. How many lenders do you work with, and do you have access to both A lenders and B lenders? A lenders are the big banks. B lenders are alternative lenders for people with credit challenges or non-traditional income, like being self-employed. If your broker only works with 1 or 2 banks, they're not really a broker, they're a bank employee. You want someone who can shop your mortgage to 10, 15, 20 different lenders to get you the best deal. This, in fact, is the best reason to use a mortgage broker instead of going to the big banks, because they do tend to be independent and they can shop your rate. This will get you the best deal. Feeling overwhelmed by all the mortgage jargon? My first-time home buyer's guide has a whole section that defines these mortgage terms in plain English so you can have a confident conversation with your broker. It's free to download in the description below. Getting the right mortgage is a huge step in avoiding costly mistakes. For a look at the other major traps buyers fall into, you need to watch my video on the 3 most devastating mistakes that cost Hamilton buyers thousands. You can watch it right here. If you found this video helpful, don't forget to like and subscribe. Thanks again for watching, and I'll see you next time.